Share CFDs example. What is a share CFD? A share CFD is an undated contract that captures every aspect of share trading, except that you don't have to put the full contract value. This is because share CFDs are traded on margin, so you only need a small proportion of the total value of a position to trade. Now, to work out the contract value, you have to multiply the number of shares in the contract by the price of that underlying share. The contract value will change in line with the movements in the price of that underlying share. Share CFD example, buying Vodafone. Opening the position. Let's say on the morning of the 21st of December 2009, you decided to open a position on Vodafone as you think their share price will rise. The stock is quoted at 140.85 to 140.95 in the market, and you buy 10,000 shares as a CFD at £140.95, the offer price. As a CFD trader, instead of putting the full value of the shares, £140.95 times £10,000, with Vodafone being the blue chip company, your CFD provider requires you to only supply a deposit of 5% or £704.75 to open this trade. Closing the position. Okay, so it is near the end of the day, and after an interview is published in the financial press with Vodafone's UK head of business, Vodafone rises to £143.25 to £143.35, and you decided to take your profit. You sell your 10,000 shares at £143.25, the bid price. Now this example here will show you how your profit is calculated. As you can see, you'd have made a profit of £230. Now, in order to calculate the overall result on the transaction, you would also have to take into account the commission you have paid and the interest and dividend adjustment. Of course, had the market moved in the opposite direction, you would have incurred a loss that may have exceeded your initial deposit. Equity CFDs also mirror all the rights in the underlying shares. Thereby, the owner of a share contract for difference will receive cash dividends and participate in stock splits, rights issues, or take over corporate action. If I buy share CFDs, does that mean I own the shares? No. With contracts for differences, you never own or have ownership rights in respect of the underlying asset. The agreement between you and the CFD provider for a share CFD is to exchange the profit or loss on a stated transaction. Through holding a CFD, you don't own the underlying share, and as such, you don't have any voting rights. For more information, visit www.contracts-for-difference.com.